I'm Martin Smith and this is your UFXBank Week in Review. Today we'll cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines of the week, let's look at last week's rises and fallers. The euro-dollar took a tumble last week, losing nearly 2.3% to close on Friday at 143.45. The pound had a similar down week versus the dollar, but didn't fall as much as the euro. Overall, the pound lost 1.2% and closed at 162.23. The US dollar, like most of the major currencies, struggled this week against the yen. The dollar-yen managed to pull out a gain of 0.05%, which left the pair at 80.30 on Friday's close. It was mostly back and forth for the dollar CAD this week. Solid gains were matched by rounded losses, and the pair eventually closed at 0.9795, a gain of 0.2%. Looking at commodities now, July crude orders took a big fall on Friday, losing about 2.6% on the closing day alone and erasing all gains on the week. Crude orders were last trading at $99.29 a barrel for a weekly loss of 0.93%. Once again, gold struggled to make gains the week, eventually losing 0.7%. The precious metal was last trading at $1,530.93 per ounce. In headlines this week, risk aversion took center stage as higher yielding currencies and assets related to economic growth gave way to those perceived as safer investments. The dollar, the yen and other so-called safe haven currencies saw a spike this week as manufacturing reports came back negative and signs of a global economic slowdown are starting to emerge. The euro fell against the dollar for the first time in over a month, leading many to speculate that the interest rate increase expected later this year is unlikely to come to fruition. With lower manufacturing outputs, the fear of rising inflation, and the sovereign debt crisis still looming in the shadows, investors are finding that their appetite for riskier assets is beginning to wane. Trichet stated on Friday that he believes the euro area finances as a whole are sound, unquote, but the overall ambiguity of the ECB president's statements are testing the resolve of investors and their tolerance for risk. The recent decline in oil prices could prove helpful, however, in reviving a slow global economy, as manufacturing output will likely increase as costs decline. The 2.6% drop seen on Friday came as Saudi Arabia announced plans to increase oil production to 10 million barrels per day. Though the plan has not been officially confirmed, nor have any specific numbers been released, the aim of the increased production is to make up for what could come from Libya. The North African nation has been embroiled in what appears to be a civil war, and leader Muammar Gaddafi has cut oil production by nearly 90%. News came as China announced a 13.1 billion trade surplus for May, which is much lower than the 19.3 billion that was expected. In addition, the Canadian dollar also suffered as a result of the drop, since the currency is heavily tied to the price of crude oil. The recent situation with the CAD, however, is not entirely based on this week's decline in oil prices. Instead, it is more likely related to the economic problems of its neighbours to the south, who seem to be struggling with slower economic growth and a faltering economy recovery. Fed Chairman Ben Bernanke expressed his own concerns this week, calling the US recovery frustratingly slow, but stopped short of indicating any plans for further stimulus. On June 3rd, a government report showed that US employers hired the least amount of workers in 8 months, and retail sales fell by 0.5% in May, which is the first drop in almost a year. Still, Bernanke indicated that he and other policymakers had planned to finish a $600 billion bond purchasing program. The overall outlook of the dollar has been bearish among most analysts and investors, but Japan's indication that they are monitoring the yen's appreciation against the dollar could signal a small jump in the near future. As long as risk appetite remains low, the dollar will continue to make gains against its higher-yielding counterparts, but the overall pessimism on the dollar should lead investors to temper their expectations. Well, that's all we have time for today. I hope you enjoyed this week's Week in Review, and I hope you'll join us next week. Until then, be sure to visit us at ufxbank.com for simple, safe, secure trading. For UFX Bank, I'm Martin Smith. Good luck and happy trading.